Let's deal with BHP, because we've had a little bit of time to sort of digest that. Estimate-beating numbers then coming through from BHP. Give us the standout metrics.
It's the dividend for me. They raised their dividend way above what the minimum they guided in their new policy, and well beyond what people had expected, and it really confirms that the rebound in mining is strong and getting stronger, and secondly that there does seem to be a change in strategy among the leadership of these companies, that as they reap the rewards from this rebound, they will give the money back to investors, because in previous cycles they've invested in some dubious projects. There seems to be, if we're going to make money, we'll give it back to our shareholders.
OK, so a change in psychology then perhaps here. All of these mining companies then having to deal with higher... not having to deal with, but benefiting really from the higher commodity prices. Just delving into the numbers from Anglo American. So the EPS number looks to have come in better than the estimate, as we were saying. But really what was crucial, or what was interesting going into these numbers, is what they plan to do with some of those assets they said they would sell. A little bit more detail coming through there. Anglo's saying in their statement, and you'll correct me on the pronunciation perhaps, Will, Moranbah, Grosvenor nickel assets to be retained, they say, and no further disposals planned for deleveraging purposes. Where does this leave us on the asset sales story?
So of all the big miners, the turnaround at Anglo is the most striking. A year ago, the share price was rock bottom. They had to announce this massive plan to shrink the company. In the last year, the share price has tripled, and they find themselves in a position where they don't have to do all the things they said. They don't have to sell all these mines. They're going to hang on to them and remain a bigger company. So it really is quite a change in strategy driven by this rebound in commodity prices.
And something we'll pick up with Mark Cutifani about when we speak to him at 8 o'clock London time. Stephen, when you look at the rebound that we're seeing in energy, in commodity prices, has this gone too far too quickly for you? Is it based on too much expectation around China and around Trump infrastructure spend? What are the drivers, do you think?
I think the drivers are the ones we've talked about the last 3 months, which is this kind of global reflation trade, which started in the US before Trump, but Trump kind of accelerated it, has definitely expanded. If we look at our indicators, has expanded out into Europe. You've had very good data out of China. The reversal of deflation in China has changed a lot of the mindsets and the psychology, I think, around what is going on there, at least for 2017. So I think there's some pretty good kind of fundamental reasons why commodities have gone from being a pretty kind of a basket case asset class for a couple of years to being a place where, you've seen, clearly a very, very good, strong performance. Not related to, but helped by oil being very stable as well, because there's that psychological kind of connection between the two. And I think for companies, as you mentioned earlier on, it's provided this kind of huge breathing space and catalyst to really kind of get themselves in the position that they wanted to be in. And this is a sector that for many years massively overinvested, and for credit investors that was a big problem that kind of came to roost last year. It's really changed the kind of fundamentals of the sector. And
one of the comments we're getting from Anglo American, in fact, this morning, they're talking about their priorities for 2017. It includes resuming dividend payments, includes costs, adding $1 billion in net cost and volume improvements, but also saying targeting a return to investment-grade credit rating. This is a crucial factor for you, then?
I think it's critical, because I think that was the key thing that last year, particularly specifically around them, but more broadly around the sector, was that the sector was just over-leveraged. Commodity prices were falling, the environment was bad, and actually that they were going to have to do some pretty drastic things, as you mentioned. The pressure has been taken away from them. What we would want to see from any company in this situation is that actually they learn from the mistakes going forward, and that credit investors are part of the package of how you go back and reward investors in the company.
What are people saying about the pricing from here, though, Will? Do you have to make aggressive assumptions about what Trump's fiscal policy looks like to get commodity prices to go higher, or is that just only one part of the story and they could go higher anyway?
This is a reason to be cautious, I think. I suspect that people have overestimated the impact that Trump can have on global commodities demand. China remains the prime driver of global commodities demand. It consumes half the world's copper, for example, and the majority of the iron ore. And yes, the Chinese economy, people feel a lot more confident in it than they did a year ago. But, of course, that could change. And there are always questions of transparency in China about what the policy will be and how much stockpiles are actually held in the country. So I think a sensible investor would be cautious about the outlook for iron ore and copper, both of which have had extraordinary runs over the last 6 months. Although copper has important supply side issues as well.
I spoke to an analyst at Barclays a little earlier on, Stephen, who was saying that in terms of China and the property cycle there, it looks like yet another property cycle is rolling over in China. Is that what you would fear when you look at these commodities?
I think that the property cycle kind of is a reflection sometimes of people look at property as what's going on in China. I think for commodities, more interestingly for us, is kind of what's going on in the industrial sector and what's happening really around this inflation-deflation scenario. I think that has some room to run through this year in terms of this, and you've seen it in Chinese equities, for example, in terms of this focus on or shift away from deflation. Deflation was the biggest concern, I think, for China in the short term. I think property will always be a big challenge, and the kind of where we are in the cycle has been talked about for several years.